I've had several questions about problem 12-5. It's the statement of partnership liquidation, so I thought I'd try to do a quick screencast here and help you guys out. It says, after the accounts are closed on April 10th, prior to liquidating the partnership, the capital accounts of Zach Fairchild, Austin Lowe's, and Amber Howard are $37,700, $6,900, and $29,500 respectively. Cash and non-cash assets equal, they give us those amounts, and then they give us the liabilities. First thing we can do is go ahead and drop in this right here. All they're doing is giving us the balances before we do anything else. So it says cash is $10,000. So let's type in $10,000 for cash. It tells us up here our non-cash assets total $74,100. Okay. And our liabilities, it says the amount owed to creditor is $10,000. Happens to be the same as our cash. Capital for Fairchild is $37,700. Capital for Lowe's is $6,900. And Howard is $29,500. Okay, and those numbers all came from up here. If we were to add up our liabilities and capital, it should equal our assets, cash and non-cash assets. Let me bring up a calculator real fast and prove that that should be true. So liabilities are $10,000 plus $37,700, $69,000, and $29,500 equal $84,100. And we can see here if we were to add $74,100 plus the $10,000, we'd have $84,100. So our accounting equation is in balance. Now, next, we want to look at the sale of our assets and division of loss. It tells us the non-cash assets are sold for $39,300. That means we got cash of $39,300. Now, we're selling these assets and they're being carried at $74,100. So we have to take them off at $74,100, and we're going to have to put a negative sign in front of that, I think, to keep Cengage happy. Okay. Now, let's bring up the calculator again. And if we had a carrying value of $74,100 and we only got $39,300 out of it, then we have a loss of $34,800. We've got to take this loss and allocate it to the three partners based on their income sharing ratios. And it tells us you've got 1/4, 1/4, and 2/4. So Howard is going to get 2/4 or half of that. So I'm just going to divide it by 2 and get his half. Howard is going to have to reduce his capital account by $17,400. Okay. Now, Lowe's and Capital each get 25%, so that's just going to be half of this half again. So $17,400 divided by 2, that'll be the same as 1/4. They both need to subtract $8,700. Okay. Now, this balance after realization, all we're going to do is get new totals. So we need our calculator still. Okay, we had $10,000 in cash. We're going to add $39,300, so we're going to put $49,300 in our cash. This is going to be 0, $74,100 minus $74,100. You have to repeat your liabilities. It's still the balance, even though nothing changed. It's a $10,000 balance. Okay, let's calculate Fairfield's amount. 387,710 minus 87. Okay, $29,000 remains in the capital account for Fairchild. And, okay, Lowe's had $6,900. We're subtracting $8,700. That puts Lowe in a deficit situation of $1,800. Okay. Now, let's finish Howard's. $29,500. Minus $17,400 is $12,100. Okay, so those are the new balances. If we were to add up this side over here, liabilities plus owner's equity still equal our total assets here. Next thing we got to do is we got to pay the liabilities. Okay, let's see here. well, it doesn't really say anything. It doesn't have to. We know the liabilities are $10,000. So let's remove $10,000 from our liabilities, and we have to remove $10,000 from our cash because we used it to pay the liabilities. Now we need balances again. $49,300 minus $10,000 is going to be $39,300. Okay, move over here to this. It's still 0. This is now 0. These have not changed. Okay, now it says in part 1 here that the partner with the capital deficiency pays the deficiency to the partnership. Okay, so the next thing, this guy here, Lowe, or whoever it is, what is Lowe's name? Austin Lowe. Okay, so Austin shows up with his $1,800. And that means we're getting cash of $1,800. Now we get new balances. Okay, we had $39,300 in cash. We're going to add $1,800. So we now have cash of $41,100. Okay, non-cash is still 0. Liabilities are 0. This did not change. This is now a 0 balance. It was negative $1,800 and they brought $1,800. This did not change. So now we're going to distribute the cash to the partners. That means we are giving away or allocating all of this cash amount, okay, which is going to bring it down to 0 when we're done. But we have to take this $41,100 and divide it up. We don't have to make any calculations at this point. We just give it to them in the amount of their capital account. So this person's going to get $29,000, and this person is going to get $12,100. Okay, and when we're done, everything is 0. Okay, and I'm going to hold on here. Trying to see some more of the screen here. Well, there it is. Check my work. Okay, so everything is good on this right here. So that's part 1. On part 2, it says, assume the partner with the capital deficiency declares bankruptcy and is unable to pay the deficiency. In other words, this $1,800 in cash right here does not show up. And that's a pretty good possibility. I have dummied up an Excel spreadsheet that we're going to use to finish this out since they don't give us one. Let's go ahead and fill in the balances after payment of liabilities. I'm just picking up this line right here. So we had $39,300 in cash. The non-cash assets are 0. Liabilities are 0. Fairfield had $29,000. Oops. Lowe had a negative $1,800. And Howard had a positive $12,100. Okay, so now let's focus on this. How would we fill it out? Instead of receipt of deficiency, this is an allocation of deficiency. We still have to bring this capital account up to 0. Okay, so that'll bring this person's balance to 0 when it's all said and done. But we're going to take this deficiency now and allocate it to Fairfield and Howard. They had a 1 to 1 to 2 ratio. Let me just put this here. You had 1 to 1 to 2 ratio. Now, when we take this person out, Lowe is no longer in this equation. When we compare Fairfield to Howard, it is a 1 to 2 ratio. Okay, so this 1 and that 2, it's a 1 to 2 ratio. So Fairfield is going to get 1/3 of this amount, and Howard is going to get 2/3 of this amount. This 1 to 2, there are 3 parts altogether. One person gets 1 out of 3, the other gets 2 out of 3. So $1,800, 1/3 of that is going to be $600. So we'll allocate that there, and 2/3 of it is going to be $1,200. And we can allocate that. So now we need to get new balances. Cash is still $39,300. Assets are still, the non-cash assets are 0. Liabilities are 0. Remember, this really is non-cash. Let me type that out in case it confuses anybody. Okay. We need to get a new amount here. This right here is that amount minus I'm trying to do this and it didn't work out so well. Okay, that equals, let me just pull up my calculator and type the answer in. I don't know what all it copied from. Cengage 29, 1, 2, 3, minus 600. Okay, 28.4. And this one over here, let's see, we got 12100 minus 1200 is 10,900. Great. Okay. So now if we were going to distribute the cash, all 39.3 of the cash is going to go away. We're now going to give these the amount of their capital account. And when we're done, everything is zeroed out again. Okay, so let's go down to what they actually asked us. There is no chart to fill in for part 2, but I'm just trying to show you how it works. I think it makes more sense if you see it in this format. So let's come over here, and it says assume the partner with a capital deficiency declares bankruptcy and is unable to pay. They want us to journalize the entry to allocate the deficiency. So to allocate the deficiency, we're looking at this information right here. We're going to credit Lowe for $1,800, and we're going to debit Fairfield and Howard for $1,200. When we debit their capital accounts, that's going to reduce their capital accounts. It's going to increase Lowe's capital account. So we're going to need Fairfield and Howard. And then the remaining partner will have the capital account credited. Let's pull these up again so we can see the amounts. 600 and 1,800. Oh, excuse me, it's 600 here, 1,200 here, for a total of 1,800. And we have now increased this person's capital account and decreased those. And if we check our work, yay, it worked. Okay, now journalize entry to distribute the remaining cash. Fairfield and Howard are both going to get cash. We're going to reduce their capital accounts when they get it. So let's see, Fairfield and Howard, and then we're going to take it out of cash. So those are our accounts, and let's get the amounts over here. It's just going to be their ending amounts. So Fairfield is going to get 28.4. And Howard is going to get 10,900. All together, that is our cash of 39.3. Okay, check our work. And we can be happy now. We have finished all of this problem. Hopefully that clears up any issues you have. If not, feel free to email me some more, but I do strongly suggest after you do part 1, you attempt at least on scratch paper or something to go ahead and fill out this whole thing as if it was not received again, because that'll help you figure out the numbers that you need for these journal entries right here. I hope that helped. Have an awesome day.